A reported combination of avian flu hen culling and sharp increases in feed costs and farming expenses worldwide has led to another wall climb in price for a staple in the world's everyday diet. The highly nutritious chicken egg is now often fetching more than 50 cents a piece retail in major city supermarkets in the USA. The internet was ablaze on the matter, with virtually every meme maker seemingly all clowning on the skyrocketing price of eggs and the increasingly limited availability of supplies. Shout out to those of you out there watching who had the foresight to secure your own steady low-cost supplies. Surely that's going to continue to pay dividends for the years to come. This past Wednesday's CPI report was probably the largest moment in gold trading in this fresh new year thus far. The consensus was it would fall 0.1% or 10 basis points lower from the last reading of 6.6%. And so it did. 6.5% was considered a neutral inflation rate as it came in on Wednesday. And the nation's currency at that rate will lose half its value in just over a decade. But I'm going to continue making the bullion bet. Having the fiat Fed notes buying power is going to happen a lot faster than that. Massive volumes of COMEX gold futures traded on the news. An immediate drop of about 20 an ounce occurred, only to have gold longs power right back and begin threatening 1900 an ounce within 5 minutes. Some industry colleagues found some interesting insights on the day's trading action regarding spot gold buying and massive gold deliveries that followed. Rafi Faber pointed out the following. Somebody bought 1,223 contracts of spot gold yesterday. 1,101 opened includes 122 closed for delivery, a total of 1,223. When you buy spot, and you buy for delivery, that's 1,222 300 ounces, or 229 million worth of gold at once. It wasn't me. Craig Hemke of TF Metals pointed out to Rafi and everyone else on Looking that Citibank was likely the party buying the large gold delivery at the spot on Wednesday. And if you could read there, H stands for their house account. Let's turn to the eastern side of the world for a brief update on what Indian reporter Manisha Gupta had to say about the gold market late this week.
Precious metals have run up too, and within that, gold is where you should keep an eye on. Fourth straight week of gains coming in for this one, and we are inching towards that $1,900 per ounce mark for the international gold prices. It's an 8-month high, and I said fourth weekly gain constantly coming in for the gold prices. You know, it was in the month of September that we saw gold prices decline all the way to $1,600 per ounce, but we are trading at $1,900 per ounce, and much of that strength really comes in from the decline in US dollar index, which is trading at a 7-month lows, and the treasury yields have continued to decline as well. It clearly has been $300 of a gain in last 3 months coming in for the market, and the latest trigger has been the US inflation, where the number has slowed to the lowest since May 2020, and the first time that the headline inflation also has declined to that monthly lows. So clearly a lot of support coming in because of that. And then you have CME Fed Watch tool pricing, a 95% chance of a 25 basis point rate hike from the US Fed in the month of Feb, which is going to be the first Fed meeting, and markets are clearly pricing that in. That is something that has been factored in by the markets therein. Good amount of buying from the central banks. The inflation has come off but continues to stay at the elevated levels, and that is the reason you have the central bank buying coming in. In 2022, central banks bought a total of 673 tons, highest since 1967, and China as well has released its holdings at around 2010 tons. This is coming after a couple of years as well. So good amount of buying from central banks, and China and Russia are the major central bank buyers who have seen a lot amount of gold coming in. And then if you look at the funds, the managers, money managers, etc., they have been buying gold on a longer basis as well. China continues to rule that roost, 100 tons since December 20th, and 16,000 new longs have been acquired in last 1 month itself when it comes to gold there. This is what gold has done in sense of import into India as well, and we seem to be around that 700 to 900 tons of an annual import in case of gold. Last year clearly was a bumper year. You saw 1,085 tons coming in, and this was the highest in a decade that we saw into that market. Another important feature when it comes to gold is that if you look at the average return of last average return of 20% is what gold has given you in last 7 global recessions. So if the markets are looking at a slowdown or weaker number continuing, then gold perhaps is the place to go to. It clearly has outperformed all asset classes in 2023 in the first couple of weeks here. This is what most banks and brokerages are telling us. This is a conservative view. 1,700 to 1,900 is expectation of gold prices in 2023 coming in from TD, Commerce Bank, State Stone Wealth and Metal Focus as well. But there are many banks and brokerage who now believe that $2,000 per ounce is coming in case of gold. Citi, IIFL and UBS are still talking about 1900 to 1950. Nirmal Bang talks about 2000. Saxo Bank says that if 2000 is taken, that 2075 is where we are headed in that sense. Stan Charts, Swiss Asia Capital, Credit Suisse, or Gold Mining ETF all expect newer all-time highs in case of gold. They're looking at levels of 2070, which has been an all-time high until now, to almost 2500 is the view coming in from Swiss Asia. Stancy also says 2250 is a possibility. Late last night, we saw reports coming in from Credit Suisse and also Goldman Sachs, who also are talking about higher gold prices. CPM says all-time highs are expected over next 5 years in case of gold. We have Credit Suisse talking about 2200 in cents of gold as well. Swiss Asia said all-time highs in this year and the next year are a possibility in case of gold. So everywhere that you look, it's all-time highs being talked about.
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion Market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Raise your hand if you like free stuff. We were going to give away a free tube of the brand new 2023 Silver Eagle coins. Then we said, nah, make it 25 tubes. SD Bullion is at it again with the Silver Eagle Monster Box sweepstakes. How many coins are in a Monster Box? Let's just say one lucky participant is going to be showing off their best celebratory dance moves with 500 shiny new Silver Bird friends. So head over to sdbullion.com/sweepstakes for your chance to win.
Click the link below to enter your chance to win this 2023 American Silver Eagle Bullion Coin Monster Box giveaway. Good luck to all of you who enter and for your chance to win. The silver and gold markets had positive weeks in monetary precious metals trading price action. The spot silver price lagged gold overall but still finished with strength, now nearing $24.50 an ounce ask to begin next week. The spot gold price took the momentum from the CPI neutrality on Wednesday and continued into its close this week. It's now threatening near $1,925 an ounce ask to begin next week. The gold-silver ratio climbed to 79 on gold's relative strength in trading this past week. China recently disclosed more official gold bullion buying from last month, December 2020, adding another 30 tons to their official gold reserves. Of course, China is not the only Eastern Central Bank buying and outright declaring more official gold reserves. I was reminded today of this recent moronic headline in the Wall Street Journal that ran on September 20th, 2022 in Q3 of last year. Yeah, that's the very same quarter in which government central banks on net declared that they had been buying gold bullion reserves at volumes not seen since the latter 1960s. Way back before the world went full fiat currency crazy, and back when the last official gold price rigging agreements collapsed into a gold-silver bullion bull market and eventual mania phase by late 1979, early 1980. We're going to talk a little bit more about that in a minute, but first, it was reported this week that citizens in Russia bought 40 to 50 metric tons of gold bullion last year in 2022. That's nearly 10 times what they collectively bought the year prior in 2021. To put that amount in context, the U.S. Mint sold 43 metric tons of American Gold Eagle coins in all of 2022. Heads up for next week's debt ceiling distraction, where virtually every talking head commenting on it is going to likely ignore the hundreds of trillions in unfunded liabilities the United States is legally bound to nominally pay out on. Of course, much of that paying is going to have to happen in this decade and into the next. I recall gold spot price being around the same current spot price in August of 2011, back when the same reoccurring political clownery show resulted in the downgrading of our national debt. Turning to the continued silver sucking sound coming out from under the COMEX, @MikeSay98 on Twitter reported this past week that over 5 million ounces of silver upped and left the COMEX system. That's a rather large chunk in a small smattering of days. And finally, to wrap it up this week, I want to show you how silly the wall-climbing record price of chicken eggs looks compared to silver, especially since 1980, and how we've increasingly rigged CPI, or Consumer Price Index, since that actual year. First, here's a Fred chart showing the price of eggs has nearly five-folded since January 1980 to now. And priced at 88 cents per dozen to start the year, January 1980, a year in which the U.S. government and its Bureau of Labor and Statistics began increasingly lying to all of us about the ongoing price inflation of the fiat Federal Reserve note. Yeah, the same fiat Federal Reserve note that almost got destroyed by gold and silver to start that year in 1980. You might think the still ancient record price of silver is still 50, laughable fiat Fed notes per troy ounce spot. And literally 50 an ounce is correct. Nominal record price of silver all time, 1980, it hit 50 roughly in 2011. In April, it hit 50. But by using the government's increasingly rigged price inflation data, backing it out, we can see their record price for silver in January 1980 is actually around 170 an ounce using today's fiat Fed note. And that's using their underreported price inflation data that's now running nearly 43 years. So today, silver at 25 an ounce is like going to the grocery store now and buying a dozen eggs for less than 50 cents a dozen, instead of these current near 50 cents per egg record price points that people are suffering under. Most people are clueless that silver is still laughably cheap in a historic context, but that's only for the time being. That's all for this week's SD Bullion Market Update. As always, to you out there, take great care of yourselves and those you love. If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.